The AI Market Reality Check. A professional perspective. There's been a lot of news lately about the AI market starting to correct. Is this really happening? And if so, what does it mean for investors and businesses? I can provide some insight into what's happening and why I believe this correction is long overdue. First, let's look at some recent developments that indicate a shift in the market. In August 2025, OpenAI launched GPT-5 with much fanfare. However, the launch was quickly overshadowed by reports of underwhelming performance and limited capabilities. Despite being OpenAI's most advanced model yet, GPT-5 failed to impress many observers who felt that its abilities were overhyped. This launch came as a disappointment to investors who had high hopes for the company's growth prospects. But it also signaled a broader issue within the AI industry, a disconnect between hype and reality. Adding to this, Meta has reportedly implemented hiring freezes in its AI division as the company focuses on profitability. According to internal emails seen by The Information, Meta's Reality Labs will not be hiring new employees until next year, as it looks to cut costs and boost profits. This move comes as Meta has already spent billions of dollars on building AI infrastructure and developing new products like their glasses with cameras. The decision to freeze hiring in its AI division suggests that the company may be reevaluating its strategy and prioritizing profitability over rapid growth. These recent events come at the same time as a bombshell report from MIT researchers who surveyed 365 enterprise AI projects and found that 95% of them are not generating any measurable return on investment. The study highlights the difficulty of implementing AI solutions in the real world, with most companies struggling to integrate AI tools into their existing workflows effectively. These findings are consistent with other research indicating that AI's practical applications are far more limited than often claimed. In my opinion, there are two key takeaways from these recent developments. First, the disconnect between hype and reality within the AI industry has become increasingly apparent. Many companies have been guilty of overhyping their products and services, leading to unrealistic expectations among investors and customers alike. Second, the challenges of implementing AI solutions in the real world are significant. Most companies lack the expertise and infrastructure needed to deploy AI effectively, resulting in limited use cases and disappointing results. For example, the recent news about OpenAI's GPT-5 launch reminds us of the hype that has surrounded the company for several years now. Despite its impressive capabilities, GPT-5's performance fell short of the extravagant claims made by its proponents. Similarly, Meta's decision to freeze hiring in its AI division amid disappointing earnings is a sign that the company is prioritizing profitability over speculative growth in this area. These developments are part of a broader trend that we're seeing across the AI industry. Companies are starting to realize that the path to profitability is more challenging than they anticipated, and that the hype surrounding AI has made it difficult to set realistic expectations. So what does this mean for the future of AI? In the short term, we may see some pain for companies that have been unable to live up to the hype. But in the long term, this correction could be a good thing for the industry as a whole. By setting more realistic expectations and focusing on practical applications, we can pave the way for more sustainable and meaningful innovation in the field of AI. It's important to note that not all AI companies will be affected equally. Those that have been able to demonstrate real-world value and build a solid foundation for future growth are likely to weather this storm relatively well. Others may need to reevaluate their strategies and make some tough decisions about how to move forward. Ultimately, the future of AI is still bright, but the path to get there may be more challenging and take longer than some investors would like. For those of us who have been following the space closely, this should not come as a surprise, as experts have been warning for years that the hype around AI has gotten out of control, and that the technology is not nearly as advanced as some in the media and on Wall Street would have you believe. The recent news is a reminder that investing in emerging technologies can be risky, and that it's important to look beyond the hype and focus on fundamentals. With that said, I remain bullish on AI long-term and believe that this correction is just a bump on the road to what will ultimately be a very profitable industry.